The return to inflation in the world means that real interest rates need to rise into positive territory, but with historically high levels of debt, such a move by central banks will not be popular, the Bank for International Settlements, BIS, head Agustín Carstens warned. In a speech focused on inflation on Tuesday, Carstens said the world may be on the cusp of a new inflationary era, and added that central bank action was needed in order to deal with the price rises. Most likely, this will require real interest rates to rise above neutral levels for a time or more. The real interest rate refers to the interest rate after adjusting for inflation, a figure which is negative in most advanced economies today. Carstens further warned that such a transition would not be easy nor popular. In many countries, starting conditions complicate matters. Households, firms, financial markets and sovereigns have become too used to low interest rates and accommodative financial conditions, also reflected in historically high levels of private and public debt, the BIS boss said. He added that it will be challenging to transition to what he called more normal levels for rates, and said it will be important to set realistic expectations of what monetary policy can deliver. Carstens further stressed that central banks should not be expected to single-handedly ensure quota. Describing the current inflationary environment, Carstens also said that inflation has now accelerated in the service sector, where price growth tends to remain for longer than for goods. As a result, inflation may become more entrenched than previously anticipated, Carstens said. He added that supply bottlenecks remain in sectors such as shipping, semiconductors, and regionally in countries that still enforce COVID-related lockdowns. However, these factors have now been combined with new inflationary pressures in food, oil, and many other commodities, with much of this increase seen since the start of the war in Ukraine. Further, Carstens pointed to three developments that he said have led him to believe inflation has become more persistent than what was previously believed. In summary, Carstens opined that the rise in inflation came as a surprise to most observers. As it began to rise, forecasts were revised up,